usually translate into, share price decreasing on the stock market. But every bad news, not really bad for us, but bad for the people preventing the share price from actually trading at which it's supposed to. I'm talking about the bad guys, the hedge funds and the short sellers. Yes, every bad news, affecting them directly or indirectly is actually a good news for the squeeze, because I'm going to share with you today some other news coming from, China. Evergrande has been suspended from trading again, and they are trying to raise cash because they are now in what we call restructuring phase. All right, this is another phase when you've been declared in default. They haven't still paid, the money they owe to the investors who lend them money. All right, the bond holders or the paper holders, but also they have been ordered to start demolishing some buildings because they were built illegally. Developer must bring down 39 buildings on Hainan Island. That landed Evergrande deemed in cross default. Share trading halted in expectation of inside information. So that is not good news for not only Evergrande, but also all of the people that are waiting for the company to pay back the money those investors give them in terms of bond. All right. So if I lend you money and I'm expected to collect that money and the interest at some point, which is agreed on the contract, if it doesn't get at that time, then the contract has now defaulted, which is really why, all these rating agencies are now put Evergrande into default status. But it takes time. It's a whole process. And then at some point, there was a company, a rival company from Evergrande that was supposed to buy some of the, stake. I think it was around 51% of the company, but there was no deal, there was no agreement on a deal with those two companies. So news like this, again, that they are ordered to demolish 39 buildings, it's not good because this is money. This is literally destroying money. But what is it good? Why is it good for the AMC squeeze? Because it is bad for the short sellers. It puts additional pressure on them because bunch of those short sellers were using these paper, these bonds, they were using this investment into China Evergrande and others as well. It's not the only one, others as well, in order to show that as collateral to the banks, to their liquidity provider, to the other companies that are giving them money and allowing them either to borrow shares or to continue to sustain those short positions. And that's why now it's just a ticking time bomb. It's just a ticking time bomb because at some point, first of all, on one hand, you're going to have those, brokerage or those banks, those liquidity providers coming to those hedge funds and say, hey, folks, I need my money back. It's been 3 months now. I'm not seeing anything. So instead, you close these positions, which means, by the way, that they're going to start buying to cover those positions, and on the other side, you're going to have some of the other lenders, all right, some of the other people here, institutional in the suits, buying the stock just for lending purposes, saying, hey, you know what? I don't want to be mixed up in this whole craziness. Let me get all my shares back right away. And it would cause just another massive domino effect. Not much at the beginning for the big short sellers, but it has to start at the very bottom. So we only need one or two of them to start falling so that we can have, the chain, the snowball effect to be in process. And then finally, it's a very bad news because those short sellers now joining 2022, where there is a risk of losing a ton of money into, this bond paper with China Evergrande, but also they don't know exactly where to put that money that they already lost a ton of those from their clients in 2022. So everybody is fearing about inflation. Everybody, is kind of looking at the market crashing in 2022 because of interest rates rising. So clients are also going to rise up and say, you know what, I would rather, sell everything. But they can't do that, the short sellers, if they sell everything from the client, because they're really playing with the client's money. So at some point, what is it going to do? because you have the clients, you have your brokerage, you have, collateral fading away. So what are you going to do? The only thing out of this is to cover. Is there no way around it? And by covering it means they have to locate and buy the real shares. And that's why if we keep holding, if we keep buying and holding more, then we can really set up at what price we want our attendees back. So it's just a matter of time, folks. It may not translate into the share price as of now, but it's just a matter of time. So hang tight.